Welcome to the Coin Bureau Weekly News Roundup. My name is Guy, and here are the top stories in crypto this week. Crypto market slump. Coins and tokens fall to key moving averages after Elizabeth Warren tables her anti-crypto bill in the Senate. Why the slump could continue this week. Peak ETH FUD. Ethereum creator Vitalik Buterin considers keeping more features on the main chain, while JP Morgan makes a bold ETH prediction. Everything you need to know. Tether reserves revealed. The CEO of Cantor Fitzgerald confirmed the US financial services firm manages some of the assets backing USDT as regulatory scrutiny increases. What this means for the market. Fed cuts incoming. Chairman Jerome Powell confirms that the central bank will start cutting interest rates next year, causing stocks to rally. When will crypto catch up? And a closer look at last week's top performing cryptos and where they could be headed next. All this and more in just a moment. Last week, the crypto market saw a sudden dip, with BTC falling by more than 10% before recovering. As you might have guessed, this flash crash was caused by hundreds of millions of dollars of liquidations. This begs the question of what the catalyst for these liquidations was. Well, from our perspective, it appears that the crash coincided with the news that Elizabeth Warren, the anti-crypto politician, had officially introduced her anti-crypto bill to the US Senate. The TLDR is that the bill would require KYC for every single activity in crypto, to the point that it would be impossible to comply. The practical effect of this is that crypto would effectively be banned in the United States. And, well, that's probably the point. The craziest part is that Elizabeth tabled the bill shortly after a Senate hearing in which JP Morgan CEO Jamie Dimon said he'd shut down crypto if he was the government. As many people have pointed out, this is probably more than a coincidence, and it underscores something we've been speculating about a lot lately. There could be a battle behind the scenes between asset managers like BlackRock, who are pro-crypto, and megabanks like JP Morgan, who are anti-crypto. This would make sense given that BlackRock & Co. want to make as much money as possible, whereas JP Morgan & Co. want to maintain their control of the financial system. The result is the often nonsensical rulemaking we see from regulators like the SEC. They're basically trying to appease both sides. In any case, assuming that Elizabeth's anti-crypto bill was the catalyst for the flash crash, then it's possible that we could see another one this week. That's because the Senate has delayed its holiday recess until further notice to work on other pending bills that its members want to deal with. As we mentioned in our weekly newsletter, this means that Elizabeth's anti-crypto bill could potentially be put up for a vote, or even passed. Now, we've explained exactly what this would mean for crypto in our newsletter, so be sure to subscribe if you haven't already. The link will be in the description. Now, what's interesting is that BTC's chart appears to reflect the possibility of another crypto catalyst taking the markets lower. As you can see, BTC is currently sitting just above the Bollinger Band moving average on the daily. You'll notice that this has been a key zone of support during the recent rally. If BTC falls below this level, it could experience a correction down to the Bollinger Band moving average on the weekly, which currently sits at just over 30k. If you factor in all the liquidations we would be likely to see, then it's possible that BTC could temporarily dip below this level before recovering. On the flip side, it's possible that BTC will bounce from the Bollinger Band moving average on the daily like it has repeatedly done during the recent rally. This could paint a double bottom pattern, which could push BTC as high as 50k. Given how overbought the weekly RSI is, though, the downside risk seems high. Now, if you want to try trading this potential pump or dump, then check out the Coin Bureau deals page. It's got trading fee discounts of up to 60% and bonuses of up to $40,000 on the best crypto exchanges. This deal is available for a limited time only, so get it now using the link in the description. Anyways, last week's dip appears to have poured more cold water on ETH, which has been lagging behind BTC. By now, most of you will know that this is clearly visible on the ETH BTC chart, particularly on the weekly time frame. ETH continues to weaken against BTC and could be painting a bear flag. However, by now, most of you will also know that ETH weakening against BTC doesn't mean that its price will go down in fiat terms per se. In fact, ETH's price action in USD looks almost identical to BTC's, and the potential double bottom bounce from the Bollinger Band moving average on the daily looks clearer. If you watched our recent Ethereum update, you'll know that ETH's underperformance against BTC is partially due to high long-term interest rates in the United States, which are finally starting to come down. Now, assuming this decline in long-term interest rates continues this week, then ETH could see a big rally. Those who saw that video will also know that there have been concerns about Ethereum's Layer 2s taking demand away from the base chain, something that Coinbase highlighted in a report last year. Well, believe it or not, but it looks like Ethereum creator Vitalik Buterin is starting to realize this risk as well. That's because Vitalik recently proposed the possibility of keeping more functions on the main chain. For context, Vitalik has long been a supporter of delegating these functions to Layer 2s. Logically, this apparent 180 could be evidence of him getting nervous about Layer 2s becoming too dominant. This sounds silly until you realize that Ethereum's upcoming Denkun upgrade will increase the speed of Ethereum's Layer 2s while reducing their cost. This will make them even more attractive to use relative to the base chain, and this could reduce the demand for ETH. Lower fees means you need less ETH to transact. And as we also mentioned in our Ethereum update, the activity and total value locked on Ethereum's Layer 2s continues to hit new all-time highs. If all of this activity had been taking place on the base chain instead, well, it's likely that ETH's price would have seen more upside due to all the extra ETH that would have been needed for fees. Of course, some would argue this is nothing more than FUD, given that Ethereum fundamentally benefits at the end of the day. This is indeed true, and the fact that so many high-profile people seem to be freaking out about Ethereum's Layer 2s could be evidence that we've finally reached peak Ethereum FUD. If you need more evidence of this, look no further than JP Morgan, which is now saying that ETH will outperform BTC in 2024. For reference, the megabank had recently called Ethereum's transition to proof of stake, quote, disappointing, and even said that it had made Ethereum more centralized. Funnily enough, it appears that JP Morgan is flipping bullish precisely because of what I just mentioned a few moments ago, the Denkun upgrade, which will supercharge Ethereum's Layer 2 ecosystem. Make no mistake, this will be big for Ethereum, and its Layer 2 tokens will likely see even larger gains than ETH. There's just one caveat, however, and that's the potential for the pending spot Ethereum ETF applications to be rejected. This is a possibility that was recently posited by Bloomberg ETF analyst James Seyfarth. James believes that the SEC could try and allege that ETH is a security as a justification for rejecting the applications. For those unfamiliar, ETH is basically the only large-cap altcoin that the SEC hasn't explicitly labeled as a security. Crossing that Rubicon would be nothing short of insane, but then again, the SEC actually thinks that stablecoins are unregistered securities. Madness. By the way, if you're enjoying the video so far, then smash that like button to give it a boost. Now, speaking of stablecoins, Howard Lutnick, the CEO of Cantor Fitzgerald, recently dropped a bombshell. The financial services firm continues to manage some of the assets backing Tether's USDT. FYI, most stablecoins in circulation, including USDT, are backed by US government debt. It should come as no surprise then that Howard is very happy about Tether's market cap surpassing $90 billion. His firm likely takes a cut of the yield that USDT's reserves are earning. What may come as a surprise is that Howard happens to be a Bitcoin maxi because he believes only BTC is decentralized. Note that you can find out what decentralization means using the link in the description. Anyhow, if you're confused as to why this is so significant, it's because Tether has reportedly been facing extreme scrutiny from US regulators. As you might have heard, the stablecoin issuer has been onboarding US intelligence agencies like the FBI to try and keep the book at bay, so to speak. So far, this seems to be working, but there's still a risk that US authorities could decide to do things the hard way, that is, launch an enforcement action. It's possible that this enforcement action would involve seizing or freezing the reserves backing USDT, hence the significance of Howard's comments. It's important to note that this isn't just speculation either. A few days ago, Tether disclosed that it recently sent a letter to US politicians detailing all the different ways that it's committed to compliance. This comes shortly after the Treasury Department asked for powers to go after offshore crypto entities. And it's not just Tether. Some of you might have heard that Circle is facing scrutiny as well. What's odd is that this scrutiny is coming from a so-called ethics watchdog, which has been sending letters to US politicians telling them to investigate Circle's connections to Tron and its founder, Justin Sun. Now, if you watched our video about Circle from last year, you'll know that there actually do seem to be some connections between Circle and Justin Sun, but these appear to be purely financial. For example, Justin reportedly purchased the Poloniex crypto exchange from Circle when Circle turned its focus to USDC. Obviously, Circle has fired back by sending letters of its own, but it looks like this so-called ethics watchdog isn't backing down. After Circle sent its letter, the ethics watchdog sent another letter essentially alleging that Circle is lying about its connections to Tron and Justin Sun. Regardless, the key takeaway here is that stablecoins are experiencing significant regulatory scrutiny in the United States. This has been the case for quite some time, and at first glance it seems like it's just more FUD. Upon closer inspection, however, you realize that the terrorist financing FUD is very effective. If you watched our video about the Binance settlement, you'll know we touched on the possibility that it was partially due to the allegations that Binance was involved in terrorist financing. You'll also know that US politicians had explicitly named Tether as another entity they want US authorities to investigate. As the Binance settlement has shown, however, this scrutiny may not disrupt the markets as much as you might imagine. In fact, some would argue that Tether getting things sorted with US authorities is extremely bullish. That's because it further increases the chances of a spot Bitcoin ETF being approved by the SEC. On that note, another bullish catalyst that's been brewing for the crypto market is the idea of the Fed finally lowering interest rates. That's because lowering interest rates will mean more people will borrow money, which will increase the money supply, which will eventually pump asset prices, including crypto. Although the Fed hasn't started cutting interest rates just yet, its updated projections, called the dot plot, forecast at least 3 rate cuts next year. As most of you will know, investors are forward-looking, which means that the markets react today to stuff that investors believe will happen in the future, in this case, rate cuts. This is why some stock indices, such as the Dow Jones, hit their all-time highs shortly after the Fed revealed its updated interest rate projections. It looks like the other indices will soon follow suit, as will many individual stocks. The charts suggest that we could actually be on the brink of a huge melt up. As you can see, the S&P 500 appears to have painted a massive cup and handle pattern over the last 2 years. If it breaks to the upside, the S&P could rally as high as 6,000 in the coming months. It goes without saying that the crypto market would participate in this rally, particularly if an ETF is approved. To put things into perspective, an S&P rally to 6,000 would translate to an almost 30% gain. Given that BTC's volatility is roughly 2x that of stocks, that would be a 60% gain for BTC. And given that altcoin volatility is roughly 2x that of BTC, then most altcoins could likely double or more. As amazing as this sounds, there's something you need to keep in the back of your mind, however. The Fed has only lowered interest rates when something bad was happening. Right now, it looks like everything is fine, but it's possible that the Fed foresees problems in the future and is lowering rates in advance. Many macro analysts believe that this problem could be related to China. To bring you up to speed, it appears that China's housing bubble has burst, and it's believed that this has decimated its internal economy. It's difficult to say for sure because the CCP has stopped publishing certain data. While this may not seem like an issue that's relevant to you, take a second to consider that almost everything in the world is made in China, or using parts that were made in China. A weak Chinese economy could therefore be a sign that the global economy isn't as robust as the governments say. Meanwhile, the Chinese central bank has been slow to stimulate, and some have argued that it won't stimulate at all. That's because the CCP is trying to eliminate speculation in the housing market and such. Whatever the case though, a financial crisis in China could be the black swan the Fed sees in the distance. The good news is that if this financial crisis occurs, then central banks around the world would eventually respond with unprecedented stimulus that would pump the markets. The bad news is that governments could take the alternative route, which is to start unnecessary wars that nobody wants. Some would say that this is happening already. Anyhow, speculation aside, last week's top-performing cryptos were Internet Computer, Bonk, Osmosis, Injective, and Helium. So, starting with Internet Computer, it's not quite clear what caused ICP to pump. Our best guess is that it had to do with the crypto project's presence at the recent environmental summit in Dubai. Chances are that it exposed the Internet Computer to some very wealthy investors. As you can see, ICP's rally was parabolic in every sense of the word. It's possible that it could continue to go higher, but not without a much-needed correction. Next up, we have Bonk, whose Bonk token rallied on the news that Coinbase would be listing the meme coin. It's safe to say that it's pointless to do technical analysis on meme coins, but the fact that Solana phones sold out because they come with a Bonk airdrop suggests a local top at the very least. As for Osmosis, meanwhile, there's a more fundamental reason why Osmo pumped. The Cosmos-based DEX appears to have experienced a surge in trading volume. The upcoming launch of its liquid staking offering for Celestia's Tia coin could have played a role as well. As impressive as Osmo's price action looks up close, it looks a lot less impressive when you zoom out. As you can hopefully see, Osmo faces a lot of resistance around these levels. If it can break above this level, however, it looks like it could triple. This is possible if we see that market melt-up mentioned earlier. It's a similar story for Injective Protocol, whose INJ token appears to be pumping due to an increase in trading volumes on Injective's derivatives DEX. Come to think of it though, it appears that a lot of Cosmos-based cryptocurrencies pumped last week. This could be a sign of investors rotating into a new sector. Whatever the reason though, it's taken INJ to new all-time highs. With INJ in uncharted territory and the crypto market at such a pivotal moment, it's impossible to know where INJ is headed next. Based on the overbought conditions though, a correction would be ideal for INJ to keep going higher. And finally, we have Helium's HNT coin, which appears to have pumped on the continued hype around Helium's low-cost mobile plan launching in the United States. As a fun fact, Helium's mobile plan currently has 5,000 users, and Van Eck projects that it will have 100,000 users by the end of 2024. HNT's price action has been nothing short of epic, but it appears that it faces a lot of resistance around these levels. A correction could come, and if it does, HNT could fall just as hard as it rallied. After all, the catalyst that seems to have kicked off the rally won't turn into a fundamental for a few months at least. And if you want to know which cryptos are pumping on a daily basis and why, and where you can trade them, check out the Coin Bureau Telegram channel. The link to that will be down in the description. And that is all for today's Coin Bureau Weekly Crypto Review. So if you enjoyed it, You know what to do. Hit that like button, subscribe button, and bell icon too. Don't forget to check out our deals page where we have massive discounts and airdrop bonuses of up to $40,000 on some of the best exchanges, only for the viewers of this channel. Also, if you want to pick up some snazzy crypto merch, the Coin Bureau merch store has it all. You can find the link to that resource and many others, where else, in the description below. Thank you so much for watching, and I'll see you all in next week's episode.